Money FM 89.3, the best of the afternoon update. Eco Money on Money FM 89.3.
You're listening to Money FM 89.3. We've got a special finance update for you. You may have noticed or read this article published on the Straits Times website that highlights that Singapore REITs may be ripe for a relook. That's as real estate investment trusts are expected to make a comeback this year after a torrid 2022. We just got to take a quick look at the numbers. The iEdge S-REIT index, the benchmark of Singapore listed REITs, fell by 12% year on year in 2022. In contrast, the Straits Times index yielded total returns of 8.4%. Now, when we're talking about REITs, there is a report that was published by OCBC that discusses the greening of our REITs here in Singapore and what you need to know. To help us break all of that down and to understand more, we're joined on the line now by Wong Hong Wei and Andrew Wong, credit research analysts at OCBC Bank. They are responsible for that report. Thanks so much for joining us today, Hong Wei and Andrew.
Thanks, Rachel. Hello, Rachel.
Sustainability, it's really become a buzzword. What does this mean for REITs, though? Are we talking about just acquisitions of new, greener buildings, or are we also talking retrofitting as well?
Okay, Rachel, this is Andrew. I'll have a crack at this. Mm-hmm. I think for us, sustainability influences REITs actually on many levels, not only the sort of things that you mentioned. Thinking about it from the ground up, yes, it means that REITs need to be focused on the sustainability features of their assets or buildings and its infrastructure. And this is typically from the environmental perspective. It also means that REITs need to be mindful of the sustainability performance of these assets. And while this is also obviously an environmental consideration, there's also a social perspective. Right, in terms of the accessibility and usability of the buildings. It also means that REITs need to have strong governance, I should say, strategy and risk management plans and capabilities. And this is an obvious sustainability influence to Hong Wei and myself as credit analysts, but it's somewhat overlooked when we're thinking about sustainability influences. Given environmental considerations dominate the conversation.
And that's it, though. I mean, are there costs involved, and how are those costs outweighed by the benefits of, developing and creating a more sustainable portfolio for REITs from an investor perspective when they're looking at the dollars and cents?
Okay, Hong Wei is here. So I'll just address a cost from a few angles. So one is in terms of construction costs, the additional construction costs to turn the building a bit more green. So in general, it's about 2 to 4% additional cost. So it is not excessive. Then the other question is this cost, outweighing benefits, or is the benefits outweighing costs? So on this front, if you think about a payback period, there was a study done by BCA. So it can range from a few months payback period to 6 years in terms of the payback period. Basically, if you think in terms of the utilities that's being saved, and also like the water, power, and that's being saved, you over time the payback itself. Other costs that can make sense in terms of payback would be in terms of lower cost of equity and debt. So, for example, if you think of cost of equity, who are the investors? The S-REITs, these are the institutional investors as well as the individual investors. So, increasingly, number of them are looking out for a greener kind of a REIT to invest in. So that will lower the cost of equity. Then for the debt side, there's green bonds, social bonds, sustainability-linked bonds that's being issued. And then there are also banks who have signed up for Net Zero Banking Alliance. So with this as backdrop, there's more and more financing available for the REITs undertaking these green practices.
So I have a question for you just on the back of that. And, I've spoken to Lawrence Lowe from NUS, and he's spoken about the greening of corporates here in Singapore. And I asked him whether or not we could see this, become more of a hygiene factor where you don't differentiate between green companies and not green companies. Do you think that's going to be the case for REITs, where we'll see all REITs need to have that sustainability element, especially when you're looking at some of the guidelines and certifications that are coming into play? You mentioned what's happening with the BCA as well.
Hong Wei here. So maybe I'll take a step at this question. I think maybe first up I would say that most of the REITs here, I think almost all of them have green buildings, and if not, they are already in the process of having their buildings green. So I think in practice it's very difficult to have that kind of differentiation. I would say that at this point in time, the pricing difference is not too observable between let's say a green bond and non-green bond. So I would say that let's say for investments, for equity and so on, maybe it could be the same similar case for now, but there is a tangible difference if you look at demand side of things. Let's say for tenants looking for green buildings, partly because of the sustainability agenda for some of these multinationals, they much rather green buildings, and I think there's increasing rental difference from this perspective.
Mm-mm. I'm Hongbin here, and I just want to drop in on this conversation and ask a question. With tourism and travel back, competition is also back, right? So how can hospitality REITs stay ahead of the curve? Does sustainability play a big role in that?
Andrew, perhaps that question for you?
Sorry. Yeah, I think it does. I mean, I just came back from holidays, right? And
I see.
Obviously, the choices that you make, as a consumer, influenced to an extent by some of the sustainability practices, as well as the I guess the strategies that some of these hospitality providers put in place, and part of that, which is somewhat cosmetic, is this the environment that is provided to travelers, as well as some of the amenities and some of the emphasis on what sustainable practices are put in place. So that is a key influence, for all the REITs. Ultimately, we're seeing that, at least from the credit perspective, there is a desire for capital, as well as for consumers, towards more sustainable businesses, more sustainable activities. And I think any business that is angled towards that is definitely going to catch a larger piece of the pie. If you look at sustainable debt issuance so far this year, last year was a lull period. Obviously, it was a lull period for all debt issuance to an extent, from a year-on-year perspective. But sustainability issuances have come back relatively quickly in the first 2 or 3 weeks of this year, particularly globally. And I think that's sort of an emphasis on, or it sort of reflects that sustainability, I think, is going to be a key theme in 2023.
Wonderful. Well, Hong Wei and Andrew, thank you so much for joining us today and sharing your thoughts.
Thank you. Thanks for having us.
No, thank you. It was a really interesting research report. Thank you. We've been speaking with Wong Hong Wei and Andrew Wong, credit research analysts at OCBC Bank, about their report that came out this week. It's talking about the greening of Singapore REITs. Keep it here on Money FM 89.3.
Listen to more great interviews. Download our podcasts at moneyfm893.sg or download our audio app. That's AWEDIO. Available on Google Play or the App Store.